Answer now is satisfactory. Question number 2, Paul Foster-Bell.
Thank you, Mr. Speaker.
I've called Paul Foster-Bell.
Thank you, Mr. Speaker. My question is to the Minister of Finance and asks, what reports has he received on the stability of New Zealand's financial system?
Honourable Bill English.
Mr. Speaker, in a country with high household debt, financial stability is important. The Reserve Bank today issued its 6-monthly financial stability report, concluding that our system is sound. The banks are sufficiently capitalised and have strengthened their funding base, while non-performing loans continue to fall. The Reserve Bank notes that all our banks are meeting comfortably new international standards for minimum capital requirements. The bank's core funding ratios are above the required level, and this makes them less dependent than they were on overseas borrowing and more likely to be sourcing their funds from New Zealand deposits. Over the past 6 months, the Reserve Bank has continued to improve its prudential regulatory framework.
Supplementary question, Paul Foster-Bell.
Thank you, sir. Supplementary to the Minister. What are some of the measures the Reserve Bank has taken to manage risks around fast rising house prices and increasing household debt?
Honourable Bill English.
Well, Mr. Speaker, house prices and household debt levels are the product of decisions made by New Zealand households. However, the Reserve Bank has responded to the risks that this could pose in the future. First, by requiring banks to hold more capital against high LVR loans, and secondly by requiring banks to restrict the proportion of high LVR housing loans. Higher capital requirements introduced in September this year were aimed to improve financial stability. The LVR lending restrictions introduced last month will directly limit the amount of high LVR lending the banks can undertake and the number of households with very high debt related to their house ownership. The Reserve Bank says in the report that it expects these measures to slow house lending and house price inflation somewhat and reduce the potential risk to bank balance sheets.
Supplementary
question, Paul Foster-Bell.
Thank you, sir. What lessons can the government take from the rise in house prices in the last decade, and what steps is the government taking to reduce the risk of a house price correction?
Honourable Bill English.
Well, Mr. Speaker, as the report points out, there are lessons for New Zealand from the experience between 2001 and 2007, during which house prices doubled. And the Productivity Commission has shown that in those 6 years, houses moved from costing around 3 times disposable household income to costing 5.5 times of disposable income, the worst deterioration in housing affordability in many decades. Interest rates by 2007 were over 10%. Households were spending significantly more than they earned. The current account deficit averaged a record 8% over the 4 years to 2008, and the export sector went into recession. We share the Reserve Bank's concern that a repetition of the same set of circumstances in the housing market could be as damaging to the New Zealand economy as they were between 2001 and 2007. This is why the government is working with councils to improve housing supply, particularly in those areas which need more lower-cost housing, by freeing up land, speeding up consenting, getting better infrastructure and lowering construction costs.
Supplementary question, Phil Twyford.
Is the Minister aware of comments today from the master builders suggesting that the fall in new build inquiries is mainly from cashed-up buyers further up the sale chain, which means that exempting first-home buyers, as the Reserve Bank Governor has discussed, exempting first-home buyers building new homes from LVRs will have little impact on the fall in new builds?
Honourable Bill.
Well, Mr. Speaker, I am aware of the comments and also aware that building consent numbers continue to rise. I understand from the Reserve Bank Governor's comments this morning that he is listening to the evidence from the building the building industry that the restrictions the Reserve Bank is putting on is having some effect in the short run on the supply of housing. We believe that the measures the government is taking to free up the supply of housing through special housing areas, changes in the RMA, reducing construction costs and so on, will in the longer run have a much more significant effect than the Reserve Bank LVR restrictions.
Supplementary question, Paul Foster-Bell.
Thank you, sir. What proposals has the Minister seen that are likely, if implemented, to increase risks to taxpayers?
Honourable Bill English.
Well, Mr Speaker, we've learned from the experience of the financial crisis and the earthquakes that proposals that involve the taxpayer taking on risk can lead to significant losses for people who are paying PAYE every week. Insurance is one industry that by definition deals in risk. Insurance companies are paying out around $20 billion for the Christchurch rebuild, one of the largest insurance payouts ever in New Zealand's history, and at least one local insurer, AMI, did not survive that disaster. So the risk of another state-owned insurer in that part of the market, for example, is that the risk would be totally concentrated in New Zealand, not spread across international industries, and that when things go wrong, it is the taxpayer who has to pay the bill. And in the last few years, that has amounted to billions of dollars. One would have thought the experience of the last few years would rule out exactly the policy proposed by the opposition, which is that wage earners should take on the business of insurance companies.
Supplementary.
Supplementary question, Phil Twyford.
When he signed the Memorandum of Understanding with the Reserve Bank that ushered in high LVRs, did he seek any advice on the impact on the new build sector? And if not, does he accept responsibility for what the master builders are calling the unintended consequence of a dramatic fall-off in new builds, or is it all still the Reserve Bank Governor's fault?
Honourable Bill English.
Well, Mr Speaker, the figures don't indicate what the master builders are saying, and that is the consent figures do not indicate there is a fall-off at all, let alone a dramatic fall-off. And of course, if there is evidence to that effect, then they can put that in front of the Reserve Bank Governor again. I'm pleased to see the member has finally become interested in housing supply, and we look forward to the support of the Labor Party for the government's program, because it is focused on more supply of housing faster.
Point of order, Mr Speaker.
Point of order, Phil Twyford.
My question was asking the Minister if he sought advice.
Order. I don't need any
He didn't address it.
The Minister did. He referred to the comments that you referred to in your question around comments about the master builder and the dramatic form.
Mr Speaker.
Order.
Point of order.
Point of order, Phil Twyford.
The Minister did not.
Order. Member Walsh, you have a seat. I have just completed telling the member that, in my opinion, the Minister did address the question. Well, the member may well say that. I don't agree with the member. And on this occasion, the answer is to ask further supplementaries if the member has them available, not to dispute a ruling by the Speaker. Question number 3, Brendan Horan.
Thank